Welcome to another video by Dale Wheatley, founder at theoptionshunter.com. Subscribe to our channel at the end of this video, and let's start your journey to financial freedom.
Good evening, everyone. It is 7:50, almost 8 o'clock. Sorry, a little bit late tonight, and hopefully you'll get this in time. Not as if there's a whole lot going on you need to really pay too close attention to, but so on the 5-minute volatility chart had a pretty nice topping pattern here, but that was not followed with the technical pattern. Notice. So that all started around 2:20 or so this afternoon. And then IWM, hey, 2:20. Well, that's odd. That's not odd. That's the way it's supposed to be. And see what we got out of it. So, and I'll show you something else. So 219 calls. They were 29 cents here. And then they moved up to $1. So that was okay, but not as good as the 220s, which were at 6 cents, and that moved up to 26 cents. So that is, what's that? 4.5 times your money just in short order. Amazing. Just utterly amazing what happens when you pay attention to these goofy patterns that we have here. So anyway, the market started out with a little bit of upside strength, so don't really see it reflected here in the technical picture. So it did have some technical strength when it first started out, and then weakness. Well, so that is today. See, all that was, excuse me. That was, volatility moved up, so it didn't really have a clear pattern on the upside. So that resulted in market sell-off, especially and easily seen on the Russell 2000. Came after the open. See it gap down on the open, then it came back and it closed almost, probably did close the gap. You see, so you notice how weak the technical picture was. So at that point, that was at 10 o'clock exactly, right? So from that point, you might have had a little better trading opportunity because it was so close to the double top. So that's what you're looking for, is a double top or a double bottom. That's we're always looking for. So result in the put side, 219 puts. See, so they stayed at the same range right there. Oh, a nickel or so at 12 o'clock today. See, and then by 12:30, see, so this was 12 o'clock. And then by 12:30, they were already up right near 1,000%. See, and then they closed, they moved up higher. So closed up to 80 cents. So that would have been 16 times your money. You'd held it to that point, but you could have rebought them at the same nickel that they were earlier here at 2 o'clock. And then same thing, that it's less than half an hour's time, but yet it was 16 times your money. See, that's the thing we're interested in, is percentage return, and whether or not the pattern will continue. And this, according to volatility here, says no, it will not continue to the put side. See, the P for puts will not continue to the put side starting at 20 after 2. Well, this was 25 after 2 or 20 after 2 right here. See, so that would have been the maximum you would have been able to make on any puts today. 16 times your money on that. So you sure don't want to hold it when volatility has an extreme topping pattern with a downside divergence. Well, that is a sure sign that the market is going to move higher. So that is something to be careful about. So anyway, see what happens on the SPY as well. See, SPY, the 618. Oh, okay. Price was extremely broken, technically not broken. See, that's what we look for. So you got to pay close attention on these 5-minute charts and stuff like that. Just the nature of the beast. You have to pay close attention to what's going on if you're going to trade on 5-minute chart patterns. Let's see on the Qs. Same thing, price was much lower and technicals were much higher. So that was from below 550, closed at 552 something. So see if the options were available to trade under 10 cents. 551, we'll take a look at. See, no, they weren't. So, you'd be going to stretch, 39 cents. I don't pay 39 cents for options no matter what. There's no way, no possible way. So this is where you get into some kind of a situation where, that's just not worth it. See, these were like 15 cents. That's way too much, probably because ended up with volatility being advanced on the day. And it was still advanced, and that was adding to the cost of the options premium. So we want to stay away from something like that. So it appears like the Russell 2000 was the most fairly priced. So, I don't know what this is on the downside here. So, you think that there would be a good opportunity this week. Okay. Well, okay. The market closed at 1 o'clock over here on the 3rd over here. And so this is weak, so they're just showing the market open till 4. That's incorrect. So closed at 1. So it's a little bit skewed on the data. Yes, stay away from it. Doesn't matter what we're doing. Either we think it's a fair value or it's not a fair value. So who cares whether or not they show the charts going all the way till 4 o'clock and only went till actually 1 o'clock. So, see that's not a value for me. Anyway, hope everybody understands what's going on, and I'll talk to you tomorrow afternoon, actually. See you there.